Okay, hello, Futex traders, and welcome to the second part of the introduction of a price ladder, where we're introducing the price ladder. And what we're going to be going through today in particular is how to use the price ladder. So, and in today's lecture series, we want to be covering predominantly is how we're going to be placing bids. We're going to be looking how we're going to place offers into the marketplace. And then we're also going to be looking at how to cover trades. When I say cover, it's a technical term for, technical term for basically saying you like to get out of the trade. If you're in a trade, covering means you want to get out of the trade. Okay, so let's just start this off. So first and foremost, we're going to look over here. If we look over at our price ladder, again, coming in from the previous video that we just made, we're looking at the Eurostoxx 50. So that is the Eurostoxx 50 index futures. Always looking at the future. This is a live simulation of the market. And as we went through yesterday, in the last video, we showed you what the bids were. So all the bids, we showed you what the offers were, and we showed you the price column in the center. And what we're going to look at today is how we're going to interact now with the marketplace. So first and foremost, let's take a look at how we can place bids into the market. Now, if we take a look at our price ladder, and we see how it's structured, this is our Futex Live price ladder powered by Neon. What we're going to take a look at is, first of all, how we can adjust our clip size. So the clip is basically the amount of contracts, the standard amount of contracts you get in and out of the market with. So our clip, as you can see, is set to 5. And with this, you can place orders into the market. So with a standard clip of 5, and let's say we wanted to buy at the price of 32.32. In order to buy at 32.32, I just have to click on the blue column left of the price that we want to buy at. And once I have clicked at that price, you can see just on the right hand side, a little blue box has appeared, showing me that I'm now bid at the price of 32.32. So if the market were to come down, currently trading at 32.36, if it were to come down 4 ticks in this direction to the downside and trade through all of these contracts, I'm somewhere, because there was already 900 lots there. Theoretically, I would be, after all those 900 lots were traded, I would be the next 5 lots. So if it's come down 4 ticks, trades out all of these contracts and basically when it gets to me, as I'm somewhere pretty far back in the queue, I can get filled, and I would be essentially at that point, I would be, if we just point this out right here, I would be long 5 contracts, or 5 lots, as you would call them. So if it comes down and trades me out here, I would be long 5 lots if it trades out through there. So that is how you would place your bids. Now, likewise, if we take a look, just remove this. If we wanted to place offers, do the same exact thing. We have our standard clip of 5. Let's say I wanted to offer at 32.41 in front of these 1,044 contracts. If I wanted to place an offer at 32.41, basically saying I'd like to be short or sell 32.41. I just click on the column on the right-hand side, and automatically, as you can see, a offer or an indication in red pops up showing me that I'm currently offered at 32.41, that price. So obviously the market would have to rally or move up from 32.35, 6 ticks up to 32.41, trade through these contracts, and I would get filled. And at that stage, I would be short. Now, what happens when I actually do get short? So let's just try and do this for you guys now. So for example, I wanted to be long 32.34. I just place a bid at 32.34. There's now 60, 50 contracts left. Once it's trade through them, now I'm long. As I'm now long, you can see what happens to the middle price column. It now changes from gray to blue. That is now indicating to me that I'm long. When this turns blue, it's showing me that I'm long, that I'm now long the market. Now it's trading one price below me, so I'm currently offside, as you would call it. And let's just say I wanted to get out of the position. And this is what we would call covering the trade. If I wanted to cover the trade, I would basically hit either at market or I could put in a stop loss order. Let's just say I wanted to hit at market and get out for a 1 tick loss at 32.33. I'm currently long at 32.34 and I wanted to get out for a 1 tick loss. So I could either, now as it's trading there, offer it for a scratch to get out flat, or I can pull it down for a 1 tick loss, or I can click at 32.32 now, which is now currently the next available bid to hit. I can click at 32.32, and if I were to click 32.32 as I just did there, I just took a 2 tick loss from 32.34 to 32.32. So if you want to buy the market, put a limit order in and buy the market at a price that's not currently trading, it's not at market, a price that's available now at market, I would have to place it at the area where I want to buy or place the offer at the area where I want to sell. Now, if I'd like to buy at market, I just click where the next available offer is. So currently the next available offer is 32.34. If I wanted to buy 32.34, I just click at 32.34 and I'm long. If I wanted to get out for a 1 tick loss, I just click the next price lower, 32.33. I can likewise do the same exact thing to the downside. If I wanted to sell 32.33 now, which is the next available bid, I just click at market at 32.33. I've just sold 5 contracts, and now I'm with that red box is now turned red, as you can see here. It's indicating to me that I'm now short, or that I have sold 32.33. And obviously, with me having sold 32.33, I would want the market to now travel lower, ideally. But in any case, likewise, if I wanted to get out of this position, I just do the same exact thing. If I wanted to take a 1 tick loss, I just click 32.34, and now I'm out of the market. So this is essentially how you would get in and out of your positions. Now, technically, that's me covering a trade, and merely, just hitting market. So in order to cover a trade, you can hit market, or you can put in an automatic stop, a stop loss order. Now, how do we put in a stop loss order on the price ladder? Let's take a look at that. In order to do that, as you can see, this is the price ladder, the VTEX live price ladder. What you would click is, currently we're using limit orders. So whatever we put into the market is a limit order. If we wanted to put a stop order in, we merely just click stop order. and we can put that into the market. So for example, if I wanted to get long 32.34 and I said, okay, I'm wrong if the market trades 32.32, I click the stop loss. Let's do that again. I click the stop loss order. I click at the price at which I feel I'm wrong and where I should get out of the market. Now I've got a stop loss order in at 32.32. If the market trades at market 32.32, which it just did, it traded 2 contracts at market at 32.32, that hit my stop loss order that I placed, and now I've taken again another 2-tick loss because I was long 32.34. The market had traded 32.32, and now it hit my stop, and now I've covered for a 2-tick loss. Great. These are the basics of how to use a price ladder. In the next price ladder video, we're going to be looking at how to set up the price ladder workspace. So stay tuned and trade on.